So good morning to everybody who is here watching live. This is Money Matters, a different kind of edition, and broadcasting live right now on Real Estate Investing Secrets Facebook. So today we're going to be taking a look at what's going on in the real estate world. We have quite a bit of news about the mortgages, the lending, the borrowing, what the data shows us, what the metrics shows us, so that we can make a intelligent decision as to what we should or shouldn't do when it comes to real estate investing. If you are a homeowner, this is a good show. If you are thinking about getting into investing, this is a good show. If you're thinking about selling or buying, this is definitely a show for you. All right, y'all. So let's do this. One more time. So, one of the things that we're noticing is that there's not a whole lot of supply happening, right? And you've heard that, and that's what's been raising the prices, and of course creates the bidding wars. And as the bidding wars start creating, the affordability kind of goes out the window, so to speak, and the prices keep on going up. And that's what's been fueling 2020. That is really the story. We had way more buyers than we had sellers. It's definitely a seller's market, meaning you can get the most money right now than you could ever before. You can probably close in record time, but the problem is people are not selling. And the question is why? And I'm sure that if you're one of the owners that was like, should I sell? Should I not? You probably know all of the reasons as to why. And a lot of these things are going to make absolute sense to you because they make sense to me. So, one of the things Zillow actually has done a research and said, why are people not selling? Like, what's going on? Well, one of the things that people are saying is life uncertainty. More than a third of homeowners are saying general life uncertainty is the reason they're not selling. Then they have financial struggles. 31% are saying, well, financial anxiety is behind the decision not to sell. 44% of those surveyed by Zillow said they experienced some sort of recent work or pay related change to their household. So that's kind of creating the reason why. Of course, finding a replacement home. 65%, no, sorry, 63%. Let me correct myself. 63% of sellers are also buyers. So when they sell one home, they also have to buy something else. And the problem is inventory is so low, prices are rising, and so they are worried about the fact that they're going to sell and not be able to find something else. Over 30% of those surveyed are worried about this particular piece. Many individuals have recently refinanced, and so right now they have very little incentive to sell because, well, for one, they just refinanced, so they potentially could lose financially if they try to sell because, potentially they refinanced at the higher price. They might not be able to demand that price whatsoever. And so that's the reason why they're not doing it. They're looking at mortgage rates and saying, I just got this really sweet deal over here. Do I want to go in and try to get something a bit more expensive? So they're saying, I don't know how I feel about that. Number five is the health related concerns. Of course, people are worried with the pandemic that as people go into their homes, they're going to actually bring stuff over to them, right? So that's one of the reasons why they're not doing it. Or they're worried about when they go buying themselves, that they are going to potentially get themselves exposed when they're out there shopping. So one of the things is that homeowners, to get the sidelines and kind of think about it, it is a seller's market, as we just covered. You're probably going to get top dollar. You're probably going to be able to close in a record setting time. Again, this is not a guarantee nor an advice. I don't have a crystal ball, nor does Zoom or Zillow for that matter. But there are ways to sell and buy property remotely. So you can actually get a virtual tour. You can schedule one yourself or create one yourself or work with the local realtors if you want to do that. And you also can close on your mortgage virtually as well. So one of the things that I know folks have not been doing quite a bit of is utilizing this particular methodology. And I remember years and years and years ago, Okay, it's not years and years and years, about 6 years ago at this point, I was relocating from Arizona to Rhode Island, where I currently am and broadcasting from. So good morning. And I wanted to buy a house, but I couldn't necessarily like fly over to take a look and then fly back. I'm like, this is ridiculous. In this day of modern technology, can't we just do this? And I reached out to so many realtors, over 20 of them. Only one person responded back, and that's the person I went with, because I said, hey, I can't do this, can we do this virtually? We can do some sort of FaceTime or that kind of stuff. And this one realtor agreed to do that. Nowadays it's a little bit different, more people will agree to do that stuff, so you are in good hands if you want to do that piece. All right, so the next piece of article that I want to go over in news is mortgage demand. And of course, we are up yet one more time. Now, one of the interesting things is that mortgage application to purchase a home has jumped 9% last week from the previous week. So this is a nice sort of bump in, which means that people are going in and starting to apply to kind of go in and see if they can get a home. Purchase activity continued to show impressive year-over-year gains, with both the conventional and the government segments of the market posting yet another week of growth. Housing demand remains strong, and despite extremely tight inventory and rising prices, home sales are running at their strongest pace in over a decade. Average purchase loan amount was hit to $375,000, right? So, of course, some of them are less, some of them are more, but this is the average. Average contract interest rate for 30-year fixed was 2.92%, and with the points that decreased from 0.35 to 0.31. Application to refinance home loans did fall 5% for the week. So that's one piece that I think it's very interesting. But on the flip side of things, we are seeing pending home sales that are down 1.1% for the month of October, and they were down 2.2% for the month of September. So while we are seeing a dip down in the pending home sales, we're seeing a slowdown in that dip. And there's a potential now, with combining this information over here with the fact that the mortgage applications have actually jumped, we could potentially see that the purchase or the pending home sales are going to potentially slightly tick on up for the month of November. Because remember, we are in early December, so when we talk about last week, this is November, so it takes a little bit of time for us to get the data. We'll see how it turns out, but that's just kind of how I'm thinking. The supply of homes for sale also hit another historic low of just 2.7 months supply for the current sale. This is ridiculously low. As you know, 6 months is about the healthy market. This is very, very, very unhealthy on the supply side of things, which I expect that is going to rise, continue to push the prices on up, especially if we continue to see the demand. The growing imbalance has prompted bidding wars and caused median price of existing homes to jump, and that's now at $313,000, and it was up 16% annually. This is a huge jump. Now, one of the things with these jumps, FHA is coming in and saying, well, we're seeing the jumps and we need to do something about it. So they're increasing its 2021 limit in most of the United States to $356,362, and an increase of nearly $25,000 over the 2020 loan limit. So they are increasing the stuff. Now, when you look at this amount over here, this is the sort of average for most counties. In some of the more expensive markets, this increase has actually is topping well over $800,000. And for some of the very expensive markets like Alaska and Hawaii, that actually has topped well over $1 million for the FHA loan. Of course, that's one of those things that it's kind of interesting for you to know and pay attention to. Now, one of the interesting pieces that we did see the U.S. residential mortgage originators actually start going on up. And this particular chart is very interesting to me because, let me see if I can make this slightly bigger. Nope, don't make it bigger. I actually made it smaller. Never mind, never mind. Forget my efforts. But you will see that the purchase is this orange line down over here. Then the refinance is the light blue, and then the purple is HELOC, home equity line of credit. Now, refinance is I don't know how much you know about it, so maybe we'll just add it to right over here. We're gonna do some segments over here, so we're gonna also talk about HELOC. All right, now that I have done that, so I don't forget to talk about it, let's go in and go into it and just kind of take a look. But as you can see, that a lot of it is refinance that we're seeing here in the 2020. We're seeing a little bit of HELOC, unlike in 2004 and 5, where we saw much more of the HELOC happening. Purchases, of course, are also less than what was happening in 2005, 2006, right before we went into the crash. So this is actually, while we are ticking on up, this is actually not as bad as it was in 2005 and 2006. So I know many people are talking about it and kind of saying, oh, well, we're going to see this tsunami of problems. And I think we might see quite a bit of problems. I think, again, I still am sitting firmly, or standing firmly, however you want to take it, that we are looking mostly at a commercial real estate market, that we're seeing some troubles. But we could also see if some of the stimulus or some of the assistance might come in from the government. One of the things is that the new president-elect, that I guess is still disputed, maybe depends on who you ask, is has said that he will really want to work on trying to figure out the affordability of homes to purchase. So we might see some additional things that will roll out. We'll see how it all plays out, but we could see some of that stuff come in. So here is the piece that is also very interesting for you to understand, that they might come in and try to push in some stuff which could continue to grow the prices. And of course, we do have an article that we're going to take a look in a moment of what can you expect in 2021. So mortgage rates, refinance rates plummeting to a new low. So here we go. The refi rates, thank you, Fox. The refi rates are at 2.75 for 30-year fixed. 20-year fixed is 2.625, and 15-year fixed rate is 2.250. I do believe that this is going to go down in the coming weeks. And here's the reason why. This is one of the reasons why. UWM is now offering ultra-low mortgage rates for FHA. Ahead of its initial public offering slated for mid-December, United Wholesale Mortgage is offering rates between 1.99 and 2.5% on FHA loans. Available on FHA purchase, FHA rate and term refinance, as well as FHA streamlined refinance. They're a little bit different process if you want to use the term refinance, rate and term refinance versus streamline. Streamline is much faster and quicker. You don't do appraisal, so potentially could appraise at a slightly lower level. If you're looking to appraise it at a much higher level, then you're going to go with the rate and term refinance. However, please do expect that it's going to take a much longer time, and you're going to have to pay for an appraiser to come in. And of course, you can't choose who the appraiser is. It's going to be random, and depending on whom you choose and what their personal opinion is, because that's what appraisal is, it's really a trained professional, but it's their humble opinion, in my humble opinion, that comes in, and then they make it so. So this is one of the reasons that I think we might see prices, actually the mortgage rates actually trickle on down. Well, they might tickle as well. I don't know. The FHA announced new loan limits for 2021, which increased the loan amounts. So when I combine that information together, right, I look at it and say, well, they're still looking to reduce the mortgage rate. They're looking to increase the amount that you can actually purchase. So we're using the FHA. We are seeing that the other programs are also increasing what you can do and decreasing the mortgage. We're seeing that the 10-year treasury yield is going down, which is very quickly or very connected, I don't know quickly, but very connected with the mortgages. So you put all of that together, and I am expecting that we are going to see some more activity. And you will also see that upcoming months are probably the best months to actually buy and potentially refinance. Now, the top 10 purchase mortgage lenders in 2020, the third quarter, the UWM that we just talked about is the top one. And right there, neck and neck with Quicken Loans. Fairway Independent Mortgage is in the second, or sorry, the third position. It's like 10,000 less, 12,000 less even than the first two, then followed by Wells Fargo, Caliber, Home Loans, Guaranteed Rates, Loan Depot, Guild, Movement, and then JP Morgan Chase. Those are the top 10, with the top two of the home purchase loans with UWM and Quicken Loans. So that's an interesting piece that, again, people are using the lenders that are providing the best rates. It makes sense to me why JP Morgan Chase is at the bottom of the 10, because they have started this whole thing of very much tightening of the stuff. And it's very interesting for me personally that they are even here, but I think they have loosened their methodologies since the beginning of the pandemic in March, excuse me, and April, when they have announced that they're going to basically suspend all kinds of stuff. Now, the other piece that I also think it's interesting for us to take a look is Atom Data Solutions has provided us with the top 10 opportunity zones where home prices nearly doubled in third quarter of 2020. And looking at the chart over here, but I also know that not everybody's looking at the chart. Some of the folks are just listening to this. So I'm going to go through it. You can actually see that all of the homes over here are actually the green, which is the median 2019 price, is much less than the blue, which is the 2020 median price. And on the list, we have Fresno County, California, sorry, Anderson County, South Carolina, Charleston County, South Carolina, Tulsa County, Oklahoma, Rockingham County, North Carolina, Placer County, California, San Bernardino County, California, Philadelphia County, Pennsylvania, Erie County, New York, and Maricopa County, Mariposa. I keep reading Maricopa. I want Arizona to win. Mariposa County, California. So you can see that a lot of these places have the prices on average, right? The median price, well, not on average, median price. Let me correct myself. Median price that have changed and that they have doubled in price. But we do also see that the year over year percentage is actually kind of coming down. And of course, the highest percentage is in the Fresno County. The lowest percentage is in Maricopa County. There I go again. Mariposa, not Maricopa, Nev. Mariposa County. And you can see kind of what's going on in here. Very interesting stuff for sure. A lot of the places in California that the prices are doubling, but of course, they're all kind of outside of the LA, San Francisco area. So that's also an interesting tidbit for you to know. Now, one of the things that is very interesting for us to note is the home buying calendar. When is the best and worst time to buy? Well, as you might have guessed, whenever everybody else is not wanting to buy, is the best time where you should be shopping. And when everybody else wants to shop, that's the time where you actually want to be on the selling side potentially, or just stand on the sideline. So here is the home buying calendar that has been rolled out, and buyers willing to close in December and January typically avoid prices that are well above market value. According to the price analysis, buyers who close on December 4th or January 26th will get the best deal to pay exactly the market value for property. Now, I think it's kind of hard to try to time the market on this one, because it's not really up to you unless you're a cash buyer and you agree, but you still also have to have a seller that wants to agree to that stuff. So for most folks that are financing and stuff, you're kind of mercy at the lender, at the paperwork, at all of that stuff. So, but if you are able to close on December 4th or January 26th, it sounds like you will actually pay basically zero premium. The second best days to actually close is going to be December 6th and December 26th, where you pay just half a percent of over premium, right? That's kind of what the deal is. Now, December is considered to be a best month overall, even though you're still paying 1.5% premium throughout the whole month, but it's still the best month overall to actually buy a home. Month of June proves to be the worst month potentially to buy, with the highest premium of 6.9%. Now, of course, this doesn't go in to say if you buy this December, you're going to get the best deal. Nobody knows that. We're looking at the historic data, we're looking at the aggregated data of what that tells us. But I personally have always enjoyed going in and trying to purchase homes in December and January, just because you get way less competition and you more often than not get the best deals. The states realizing the biggest discounts below full market value were Ohio in January, Michigan in February, Delaware in February, Tennessee in January, and New Jersey in December. As you can see, winter months nobody wants to buy, so typically December is, people are just in a holiday spirit. I really like December as a buying opportunity. The other one that is also interesting is January, because most people are like, holidays just finished, it's too cold, they're not interested. It's a very depressing month because maybe you just spent way too much money on the holidays, traveling and the gifts and everything else, and now you're like, I'm not spending anything. And many people have said that January is the longest month ever, followed by February, which is also another tough month. But those are the 3 months that I actually prefer to buy over any other month. Okay, so now that we've looked at all of that stuff, hold on. Excuse me. I saw that one coming. I had to mute it. I didn't want you to suffer because I know how loud that can be, especially if you have the speakerphones. So, what will happen in 2021? You likely may be wondering that. And today we're going to take a look at what will be happening with the market. Now, this is not my opinion. This is opinion coming from realtor.com. So, one of the things that you might to be aware of what they're saying, and I will put in my commentary of course, of what I think might or might not happen. Now, the realtor.com 2021 housing forecast predicts record high prices will continue rising in 2021. Mortgage interest rates are also expected to tick up again. I've already shared with you my piece of a thing, but we'll see how that all turns out. The pace of the wild price growth seen in 2020 will slow. However, prices are expected to jump 5.7% next year. The double-digit price hikes seen this year aren't expected to carry over. Here are the pieces that I do agree. I do think that the prices are, just because we ring in 2021, it's not like magically things are going to go away and show up and that kind of stuff. As much as many of us are like done with 2020, it's not really going to, you know what I mean? Like it's not like we're going to ring in a new year and then all of a sudden, like magic, somebody snaps fingers and everything shifts. It's not going to work out that way. So I do see that some of these trends are going to roll into the early 2021. I do expect that the prices will continue to rise, especially as the inventory doesn't show up. I do expect that some of the inventory might start showing up in late spring, into summer, and into fall. So, middle of the year, towards the second part of the year, I do expect that we might see some of those changes. Um, when it comes to the double digit price hike seen this year, I'd also agree with them. I don't think that they're going to carry over into 2021, but I do expect that they might continue to go on up. Mortgage rates will begin to slowly going up towards the last half of 2021, reaching 3.4% by the end of the year. Now, I do think that mortgage rates might go up slightly in the second part of 2021. However, there are pieces that I think are important for us to understand and realize, and that is that while we could potentially see that, I don't think that they're going to go back up into the mid or high or the high threes or the fours. We might get into the low to mid threes if that is the case. But again, that is going to depend on what happens with all of the potential foreclosures due to the forbearance, due to the lack of payment, due to the lack of employment, and those things. So that's something to also pay attention to before we get really crazy about what is going to happen for sure. So that's something for you to kind of pay attention to and kind of where I feel about the whole thing. Sales of existing homes are projected to increase 7% in 2021. The existing homes are the ones that the currently, people are currently living, right? Like the used homes, if it was a car, you'd call it a used car, right? Because somebody else has driven it. Now, the new homes, more new homes are likely to become available in the last 6 months of 2021, and I do absolutely agree with that. And the inventory bump is expected to be due to a combination of more sellers listing their properties and willing to get into the market, as well as builders completing more of the new homes. The builders are expecting to complete some of their constructions, and that will rise about 9%. So combined, we're going to see the used homes as well as the brand new homes coming into the market. But again, not going to happen in the first, 5 6 months. I think that's going to be sort of summer into the fall of next year when we're going to start seeing that stuff. And again, this is also going to depend on what transpires with the foreclosures potential, right? So what happens over there? Are people going to be able to rework the loans? Are they going to go in and start selling them? Are they going to be able to start paying for them? So what is going to happen with that whole piece? That is all going to depend on entire stuff. So there you go. This is kind of where we are with the news segment. Now, I do want to do something that I think I want to do from now on with these shows when we talk about the real estate. So if you have questions, we're going to do a Q&A session. So if you have questions, of course, you can submit them on the Facebook page. You can always go to onedealaway.com. That's number one, dealaway.com. If you go into the contact, you can always use the contact page and submit your questions right over there. And of course, if you're watching or listening this on other channels like podcasts or YouTube, you can use the comment sections in those areas as well and be able to put those questions there. And then, of course, on the social, anywhere from Twitter, Facebook, Instagram, LinkedIn. I'm on all of those, so easy to find, and you can actually ask the questions over there. So there you go. This is it for today. I am beyond blessed that you are here. Thank you so much for watching. If you're enjoying the show and there's some sort of thumbs up or like or check mark or plus or heart or something, hey, do me a huge favor and smash it right about now. If you're brand new to the channel, please do join it by subscribing, hitting bell notification, join the Real Estate Investing Secrets Facebook group. If you are listening this on any of the podcasts, then hey, you want to watch this live, join us on Facebook. Do subscribe to the podcast if you're enjoying it. And I will see you all tomorrow. Until next time, stay forever money blessed. And do remember, you are only one deal away.